This slide showcases BlackRock's broadly diversified business. As of June 30, 2026, assets under management, AUM, stand at $15.3 trillion, with base fees and securities lending revenue for the period totaling $5.7 billion. The first three bars illustrate AUM by product type, client type, and style. By product type, equity represents the largest portion at 58%, followed by fixed income at 22%, multi-asset at 9%, alternatives at 3%, and digital assets at 1%. Looking at client type, institutional clients constitute the largest segment of AUM at 50%, with ETFs at 41% and retail at 9%. In terms of style, active funds account for 24% of AUM, followed by ETFs at 41%, non-ETF index at 28%, and cash at 7%. The subsequent bars break down AUM and base fees by region, showing the Americas as the largest segment at 68%, followed by EMEA at 26%, and Asia-Pacific at 6%. This indicates BlackRock's balanced global business expansion. Examining the total net flows for BlackRock, we observe a positive trend starting from $82 billion in Q2 2024, which significantly increases to $281 billion by Q4 2025. Although there was a slight adjustment to $84 billion and $68 billion in Q1 and Q2 2025 respectively, the trend rebounds sharply to $221 billion in Q4 2025, indicating sustained strong inflows into the long-term investment segment. The retail long-term segment also peaked at $82 billion in Q4 2025 and is expected to maintain stable net inflows between $15 billion and $19 billion thereafter. While the institutional long-term segment started with a weaker outflow of $46 billion in Q2 2024, it is projected to gradually recover from Q1 2025, reaching net inflows of $44 billion by Q2 2026. The ETF long-term segment shows a consistent upward trend, from $83 billion in Q2 2024 to $181 billion in Q4 2025, with a slight decrease to $178 billion in Q2 2026, still maintaining a robust performance. These figures collectively highlight BlackRock's overall growth trajectory and the positive fund flows across its various business segments. This slide presents key indicators of the company's profitability. The left chart illustrates adjusted operating income and its margin, while the right chart displays adjusted net income and earnings per share, EPS. Looking at the left chart, adjusted operating income shows a steady upward trend, increasing from $1.881 billion in Q2 2024 to $2.916 billion in Q2 2026. Concurrently, the operating margin, after an initial dip from 44.1% to 43.2%, has recovered to 45.9%, remaining at a high level overall. On the right chart, adjusted net income demonstrates robust growth, rising from $1.550 billion in Q2 2024 to $2.291 billion in Q2 2026. Similarly, earnings per share, EPS, have increased from $10.36 to $13.91, sending a positive signal to investors. This sustained improvement in profit margins, coupled with revenue growth, is expected to positively influence future stock price performance. This slide details BlackRock's capital management through two key metrics: share repurchases and weighted average diluted shares, as well as dividends per share. The left graph illustrates quarterly share repurchases and weighted average diluted shares. Starting with approximately $500 million in share repurchases in Q2 2024, this is projected to decrease to $375 million by Q1 2025, and then stabilize around $450 million from Q2 2025 through Q2 2026. Concurrently, the weighted average diluted shares increased from 149.7 in Q2 2024 to 156.3 in Q2 2025, before showing a slight downward trend from 165.2 in Q3 2025. This trend indicates the impact of acquisition activities, such as the GIP transaction in October 2024 and the HPS transaction in July 2025, with the highest number of diluted shares observed in Q3 2025. The right graph shows the trend of dividends per share. From Q2 2024 through Q4 2025, the dividend per share remained consistent at $5.10, but is projected to increase to $5.73 starting in Q1 2026. This increase in dividends can be interpreted as a reflection of improved company profitability and a strengthened commitment to shareholder returns, potentially serving as a positive signal for investors. In summary, BlackRock appears to be actively managing its share count through repurchases while strategically increasing dividends per share in the long term, demonstrating a focus on enhancing shareholder value. Let's examine the trends in major market indices and exchange rates. First, looking at equity indices, the S&P 500 index rose by 21% from 6,529 on June 30, 2025, to 7,499 on June 30, 2026. This represents a 15% increase compared to the previous quarter, indicating robust growth in the U.S. market. Examining global indices, the MSCI Barra World Index increased by 20%, the MSCI Europe Index by 15%, the MSCI AC Asia Pacific Index by 35%, and the MSCI Emerging Markets Index by 41%, showing remarkable growth in emerging markets. The S&P Global Natural Resources Index rose by 28%, and the BLK Equity Index increased by 32%, indicating a generally strong performance in global equity markets. Next, in the bond market, the Barclays U.S. Aggregate Bond Index stood at 2,363 on June 30, 2026, a 4% increase from the previous quarter, demonstrating stable performance. Lastly, in foreign exchange markets, the GBP to USD rate was 1.33, a 3% decrease from the previous quarter, and the Euro to USD rate was 1.14, also a 3% decrease from the previous quarter. Overall, the equity markets showed a positive trend, with particularly high growth rates in emerging markets. The bond market maintained stability, and exchange rates exhibited some volatility. Failed to generate English script. This chart illustrates quarterly investment advisory, administration fees, and securities lending revenue. The left graph compares Q2 2026 revenue to Q2 2025. Total revenue in Q2 2025 was $4.454 billion, which decreased to $1.272 billion in Q2 2026. While revenue declined in several segments like ETFs EQ, private markets, and active EQ, this decrease was partially offset by revenue increases in active multi-asset, non-ETF index, liquid alts, digital assets, commodities and multi-asset ETFs, and cash. The right graph shows the change in revenue from Q1 2026 to Q2 2026, with total revenue increasing by $288 million to reach $5.726 billion. Although Q1 saw $5.438 billion in revenue from private markets, Q2 experienced significant revenue growth in ETFs EQ, non-ETF index, and active EQ. Notably, digital assets, commodities and multi-asset ETFs and private markets recorded negative values, contributing to a decrease in their respective segments, but this did not hinder the overall upward trend in revenue. This indicates fluctuations in asset-specific returns due to changing market conditions and the efficiency of the company's operational strategies. Let's first examine the trend of adjusted expenses for Q2 2026 compared to Q2 2025. Total expenses in Q2 2025 stood at $3.324 billion, compared to $844 million in Q2 2026. This decrease is primarily driven by reductions in general and administration, sales, asset and account, and employee comp and benefits. Notably, employee comp and benefits increased significantly from $461 million in Q2 2025 to $4.168 billion in Q2 2026, indicating it as a major driver of cost increases. Comparing Q2 2026 to Q1 2026, total expenses increased by $139 million. This rise is largely attributed to employee comp and benefits, which saw the largest increase at $4.168 billion, and sales, asset and account also increased by $85 million. However, general and administration decreased by $48 million, from $4.029 billion in Q1 2026 to $6 million in Q2 2026, partially offsetting the overall expense increase. On a year-over-year basis, employee comp and benefits increased by 28%, sales, asset and account by 26%, and general and administration by 17%, while on a sequential basis, employee comp and benefits only rose by 3%, suggesting some success in cost management efforts. This slide presents a comparison of BlackRock's alternative investment assets between Q2 2025 and Q2 2026. First, looking at client assets, we see a significant increase from $474 billion in Q2 2025 to $715 billion in Q2 2026. Notably, the private credit and infrastructure segments have grown substantially year over year, and liquid alternatives also continue to show steady growth. Next, let's examine the fee-paying AUM. This metric also recorded a high growth rate, rising from $392 billion in Q2 2025 to $556 billion in Q2 2026. This growth is particularly pronounced in the private credit and infrastructure areas, indicating that BlackRock is focusing on high-growth alternative investment sectors. The increase in these alternative assets can be interpreted as a reflection of changing investor risk appetite and a trend towards seeking long-term returns. This table illustrates the differences between GAAP, generally accepted accounting principles, and adjusted financial statements. Let's first examine the operating income. In the second quarter of 2024, GAAP operating income was $1.8 billion, increasing to $1.881 billion after non-GAAP expense adjustments. In the first quarter of 2025, GAAP operating income decreased to $1.698 billion, but after adjustments, it rose to $2.032 billion. The non-GAAP adjustment items include various factors such as compensation expenses, asset impairments, and acquisition-related costs, and these adjustments are used to provide a clearer view of the company's ongoing operational performance. Non-operating income, expense, also shows differences between GAAP and adjusted figures, with notable fluctuations, especially in the second quarter of 2025 where GAAP non-operating income of $521 million decreased to $404 million after adjustments, potentially reflecting seasonal factors or one-time events. Looking at net income, GAAP net income in the second quarter of 2024 increased from $1.495 billion to $1.550 billion after adjustments. In the first quarter of 2026, there's a significant adjustment from $2.212 billion on a GAAP basis to $2.068 billion on an adjusted basis. A close analysis of these adjustment items will help in gaining a deeper understanding of the company's fundamental earnings power.